Hey guys, it's Chris Cipriani with Remax. I'm back again with John Restagno from the Cooperators. So we just wanted to discuss timing the market. So on the real estate side of things, as well as investment. So I'll swing it over to you, John, to take it away with this slide here, and then I'll add my little real estate talk at the end.
Sure. So one of the things that we talked about, I think that you talked about, Chris, is getting into the market, right? When's the best time to get in the market? When's the best time to actually possibly sell, right? So those are all questions that the individual needs to ask themselves. And we get the same types of questions in the investment side of the market, which is oftentimes saying, oh, I wish I had timed the market better, right? I wish I knew that was going to happen. I would have pulled my money. But sometimes what you need to think about is that may not be the wisest decision of all. So I'm going to show you a couple of slides here. And these were actually presented to the Cooperators Advisors. And I thought they really are great visuals that talk to a little bit around what's happening today. So it's very relevant. So this first slide here just talks to the fact that when you invest, whether you're new to investing or whether you're a savvy investor and have been doing this for a while, that there is volatility. And throughout the course of time, there has been volatility. And depending upon how old you are, you've probably lived through a few of these different market swings. And one of the key messages here is if you looked from July of 81 and through to June of 82, there was a 39% market drop at that time, right? But again, the market starts to slowly come back up, and you can see the years down here. And so this is nothing new. And the last big market drop that we had, and everybody remembers this likely, was June of 08 to March of 09. There was a market drop of 43%. And so this yellow line really here just indicates the significance of the drop. But then again, through time, again, you see it comes back, okay? So Chris, I have a question for you. In February and March of this year, through the S&P and the TSX, how much do you think the market dropped?
Probably
percentage-wise.
Probably good amount, 10, 15, 20%, 30%, something around there. I don't know. I know it dropped, but
okay. All right. So what's your final answer?
I'll say 35. Yeah, sure.
35.
35%, sure.
Give this man a prize. From February 19th to March the 23rd, the market dropped 37.36%. Just think about that. So you can see here the red line's going down. But what's happened since? Obviously, if you're like me, I listen to Sirius Satellite Radio, I listen to Bloomberg, I'll listen to MSNBC, I'll listen to all kinds of different business podcasts. It's come back. You're looking at a 37.10% recovery. It's still not where it needed to be, but it's coming back. And there's going to be days between now and possibly the fall and again and into next year where there'll be still this whole correction piece, right? As we try to come out of this pandemic with a vaccine and, we start to see some sort of stabilization. But again, this could go on 6, 12, months that we might continue to see this. So this is the next slide. And really, I want you to look at this slide as a way to say, should I have pulled my money back in February? Should I have kept my money in the markets? And basically what this slide will tell you is that the best days typically of market returns come after the worst days. And so the first piece of this puzzle is if you did nothing in the last 25 years and you just stayed the course, you typically would have had about an 8.97% annual return on your investment. If you missed the best 10 days, it drops to 5.62. And you can kind of follow the chart all the way through. Versus people that basically had pulled all their money out, they would have seen negative returns over the course of that period of time.
So this is pretty
yes, go ahead.
this is pretty eye opening. Sorry to cut in there, but because when I'm looking at this, I see kind of the correlation with people looking to buy, especially their first home. Usually, it's usually the first time home buyers. They haven't been in the market yet. They don't quite understand it, so they're always waiting for that perfect time to buy. Um, but what I'm getting out of this is kind of trying to time everything to get the best day, and I'm just kind of relating it to the investment side, but to try and time everything to get the best day, you're kind of missing out on 10 other best days that you could have already been invested. And I'm looking at the real estate market as, okay, well, if you're waiting and waiting and waiting,
Yes.
you're missing out on those growth periods, right? Especially if
Yeah.
someone in 2015 said, well, I'm going to buy in 5 years. I can buy now, but I'll wait. And then you just missed out on 2017. So, now you bought in, and actually it's still not bad. You bought in, but you're still seeing some growth, but you've missed out on those little offshoots that go up and you can really um, see those big gains, right? Someone 2 years ago might have looked on a bungalow on the mountain that was 410,000 and thought, "Oh my God, for a bungalow!" Well, I just showed one yesterday that went into multiple offers that was 500,000.
Yeah.
On the mountain
Right.
built in 1950. So, pandemic or not, these are stats. They are what they are. But this one's
And
pretty interesting, and it relates.
and the investment market's no different. There's buyers and there's sellers, right? Everybody's at different stages of their life. I just want to point out this: the best days come near the worst. And I made that comment earlier on this slide. What this does is this just lists the best 30 trading days since 1995. And if you lived through the tech bubble crisis and had investments, if you lived through the 0809 financial crisis, if you lived through COVID, if you lived through other potential examples of where there were market corrections in the COVID era, which everyone I think here who's going to be listening or watching to this, there's been 7 of the best trading days in the last 25 years. So in terms of timing it, you, by just staying the course in some respects, might have been able to at least recover some of your capital. Okay, that I think is important. But the other piece is this is an opportunity for people to take a step back, look at your statements, have a conversation with your financial advisor, look at where you're invested, and really just, look at when do you need the money. And if you need to stay the course, you stay the course. If you don't need it for another 10 years, you're probably going to be able to capitalize on some of these returns. So I found this very interesting. I thought I would share it with you because we were talking about timing the real estate market. And we get that question a lot around timing the investment market,
Yeah, and
right?
I look at it as sometimes timing, just being in the market is pretty much timing. And I'm just going to cancel your screen
Oh,
share here for one quick second. I want to kind of pull up what's going on with the market. So everyone's expecting this big crash, and oh my God, everything stopped, like you said. Um, but you missed out on some good days. And just showing what I can show here, I did want to pull up the home price index, and unfortunately, it's not working for some reason. But we are
I
seeing
can see it here. Yeah.
continued growth. These are our appointment center stats. So now that we hit May, this is from May, we've seen a 35%, almost 35% increase in showings at Remax Escarpment.
Wow.
The following week, that's at 1887. The following week, they jumped to 22, almost 2,300 showings. And then we're at 2421 the end of May. So again, timing the market. Well, how are you timing the market? And I'm going to bring this back to first time buyers. Where and when and how are you timing the market? Because right now, what I'm seeing is a lot of showings and a lot of competition. I'm seeing the top price ranges for showings booked in Hamilton are 550 to 600, 450 to 500, 350 to 400, or top 1, 2, and 3. That's first time buyer territory right there. Um, I don't see where you're going to see drops coming or anytime soon. So whether you've already been in the market, great, you're going to see some growth. And if you're not, you might think like, oh, it's still high. But if you're getting in now, you're still going to see growth after, right? So timing the market, sure, some people do get lucky and they buy and then it explodes. But who's better off, that person that they bought just before it went up, or that person that's been invested for 3 years already and built up equity and then it went up? Who's better ahead, right? So timing the market I don't know, a little catchphrase, but it really is just about getting in the market. I think for both sides, investment and real estate.
Yeah, I would agree.